Hello traders, this is Mike Billion. Today is February 11, 2016 and let's talk about the market. Let's start with this S&P mini futures. As you can see here, we bounce at major support after we break down this bearish flat, and this is not the first time we bounce at this level. This is the fifth time we bounce at this level. The last time was January 20, and you can see here the last time it bounced from 1816 and it went up right to 1900, so 100 points in the S&P, and it was in a very short period of time. I think being this major support, you need to respect, because this is not the first time we bounce here. We were short in this one, we took profits, and now there is high probability that we can rally from here at least to test the 1878 on the S&P. The other scenario is that it cannot break out inside this resistance that was support before, and we can easily go down from here and go to the 1730s. So that's another scenario. Which one is more high probability? It's more high probability that we bounce and continue to 1878 or 1920, and it's low probability that we fail here and continue down. However, we are prepared for if that happens. We went long right when it bounced right here on the spider, and we also got Facebook. But it's very easy. If we break down below right here again, or we can use the low of today, we have to get out. So that's my take on these trades that I took. So I wanted to tell you something about targets. When I say that I have a target, it means that on my plan I have choose a target for a price to go, and I always choose a Fibonacci or a major support or a resistance. In my plan on the spider, let me show you the spider. That was my trade. I got the spider, the IWM, and the Q. My target is 173. However, you need to have not only an entry or exit, you have to have escape. And we escaped this position today, this short position, because the volume intraday, when it perfectly bounced right here. So you need to respect volume, especially when you are a major support. You get this support, you have to respect this support, because we can bounce and price can go 2 or 3% up from here, like it happens here, like it happens here, and especially if you lose using auctions. So when you enter a position in your plan, you have to have an entry, you have to have an exit, and you have to have a escape strategy. So for the escape, if you are at support, at major support like this one, because it's a multi-year support, you have to be careful and you have to preferably close the position and wait to see if you break down. We went long from here. The spider is a very aggressive position because we are still bearish in the DMI, but we're gonna have a style stop. If we close below today's low, which it was today's low was 181.09, then we can re-enter those short and we can close the long position, and we're gonna lose like 30% if that happens. Today we took 80% profits in all the positions that we entered Wednesday. So there you have a balance on your trade, because you are protecting the 80% profits. Just in 24 hours we got those profits, and you protecting premium, and now you went aggressive in a trade that has high probability. The other high probability point that I want to make you is a double bottom. This is a double bottom, a multi-year support. So that's increase the probability that we're gonna bounce from here. Now, very easy. If we break down below today's low, we're gonna be happy to get short again. No problem. But today, I can sleep. Because I saw all the volume, and I know that there's high probability that we're gonna bounce from here and at least test 188 or 193. There, I'm not gonna be super bullish and think that this is gonna go again to 212. I'm gonna be thinking again to get my profits on the loans and get short again, especially if it goes to 193, because that was the last level we failed back when that was in January 29. When we failed right there, we went right there and it fails and went back to support. So that's my take on the spider, and that's how you have to trade. You have to um, you have to have an exit, an entry, and escape, and your plan on your trade has to be correlated to your the position you are taking. It will be different if I would get let's say May calls, because I can wait all the time I want, but I when March calls only have 30 days to expiration, so I don't want to take the chance of losing my profits and losing my premium. I would prefer to enter loan right here and wait for a bounce right here to get a lot of profits. So I went very aggressive with only 15 days to trade. So those are hand grenades. We get a bounce from here very nicely tomorrow. In the next couple days, we're gonna sell that position. Especially if we get profits tomorrow, I will sell it and just keep Facebook. Let me talk about Facebook now. Facebook right here, major support, Fibonacci 99.89. It closed this gap right here. High probability that we're gonna bounce from here. High probability. A stop loss 99.84. If it close below that, I will close my position because I will know that it's gonna test the bottom around 94 to 93. Very easy position, and I like this position. Facebook is very strong, so that's why I choose this one, because this is the most strong stock that's still inside this channel. It's trending up, beautiful volume. We're talking about 43 millions he trade today, and yesterday also trades about 40 millions. He usually trades only 30 or 34 millions daily. So that's another high probability trade right here, and that's what we trade McBillion. High probability trades. When you're taking a target, the target, you're gonna have Fibonacci resistance or support, but the target should be profits. That's the target. Because if you trade looking for targets like Fibonacci, support and resistance, and you're gonna be waiting there, you're gonna lose money, because this is about to make money, not about being right. You know, oh, I'm right. I went right to my position, right to my target, but you didn't make profit, so that doesn't work. So your target is to make money, and that's what I'm trying to do, make money. Traders, so this is everything for today. Trade on.